Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is July 16, 2016, and we'll be talking about the weekly market review. But before we do so, let me direct your attention to our website. You can check us out. But more importantly, I want to go down to our disclosure and disclaimer statement page. And in particular, I want to highlight this section right here that talks about our products and services being provided solely for educational purposes. Written and verbal statements, including those provided on our website by our staff members, testimonial individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. We are not licensed financial professionals, so please, the government wants us to let you guys know that. Therefore, before you make any trading or investment decisions, make sure you consult the advice of a competent financial and licensed professional. All right? So that being said, let's go to the chart of today, of the week. Okay. So, of course, this is the SPX. We are looking at this market going up. If you guys remember, last week we mentioned that the market would be making new highs and going higher because everything was written on the wall that this chart was ready to go higher. Okay. One of the things that we were pointing out was the fact that we broke out of that resistance right there for the market to go higher, as well as the resistance that was set back here. Okay, and showing that that was reasons why we saw this market ready to go higher. And so literally every day we went higher with the exception of Friday. Okay, so what does that tell us? Does that show that this market is ready to turn back down? Not really. Again, the biggest thing is we've seen that this market is showing signs that it's ready to go higher. Could we get a pullback to retest this? Possibly. Okay, that would tell. But again, before we can say that this market is definitely not going any higher and is going to reverse, because a lot of people out there are talking about this market should be bearish and should be going down and it's just going to tank because this is a bubble, then we won't be looking at this as a bubble until it closes below here. Now, some people might look at that and say that's a long time for the market to go from there to here, but that's just the way it is. Okay. Okay. Excuse me. That being said, the big thing is if you look at this resistance area right here, it has been broken. Okay, so that is huge that the market broke above that, and it's continued to stay above that. So again, there's just so many things that are showing us that this market is ready to go higher. Let me direct your attention to. Let me remove this real quick. Let me direct your attention to the monthly chart. The monthly chart. Okay, I want to show you something here. Because I've been hearing this a lot, and I want to address this, and that is the fact that I actually heard this analogy last week. Somebody saying that this market is like a horse on a racetrack that is only supposed to run 4 laps, and now we're on lap number 7.5, and that it's impossible for this horse to keep on running when it only is supposed to run 4 laps. Eventually, this horse would, pass out and die, and that's kind of like what this market is doing. Okay, that's what I heard. All right, so I tend to disagree, because one of the things that I see is happening and might be a mistake that people are making when looking at this market is they're expecting that this market should drop like we see right here in 2008. And as well as we saw in 2000, from 2000 to 2003. Okay, that's the type of drop that everybody's expecting. Everybody's expecting that drop. Okay, but one of the things that you have to be aware of, and why I want to bring this to your attention, that this market might have already seen the worst of its bear market and ready to start going higher. How can that be? How can that be? That would mean that this market has been going for 7, 8, 9, 10, 15 years without no rest. Okay. Unfortunately, I can't take you back to a time frame prior to this. Okay. But let me do this. I'm going to show you something here. And what I'm going to do is go to stockcharts.com. Okay. We're going to go to the SPX. All right. And we're going to go to the weekly chart. I'm just going to go to the weekly chart. And what I'm going to do is go to a select year and date. And so over here, I'm going to go to the oldest data we can find, 1990. Let's go to January 1st of 1990. Okay. And what I'm going to do is go 10 years into the future from 1990 to 2000. So let's go to 2000. And we go to January 1st, 2000. So that is exactly 10 years. Okay, 10 years in a few days. Okay. I'm going to do that and update this. I want to show you something. Okay. For all those people that believe that, oh no, we have to have a huge market drop, a 50% drop and all that stuff. How could this market just keep on rallying and rallying and rallying? If you look over here, I mean, that's kind of like what we had. Yes, we had this drop right here. But from 1991, 1 year, 2 years, 3 years, 4 years, 5 years, 6 years, 7 years, you catch my drift? All right? Everybody, I bet you, were probably thinking, oh, there's no way this market could keep on going up. 8 years, 9 years, 10 years, okay? This market just kept on going. So there's no real, the point I'm trying to make out of this is that there's no real rule that says, oh, it has to be 5 years, or it has to be every 4 years, or it has to be every 7 years, okay? Because all that does is like it makes you have a bias and it doesn't allow you to trade what you see in front of you, okay? Because you're so worried about all these external factors that has nothing to do with what's happening with price right now, okay? People who were thinking from 19, even if we go back, okay, so from October of, well, somewhere around here in 1990, so we had 1 year, 2 years, 3 years, 4 years, 5 years. Oh, this market should drop. But what did it do? It went higher. 6 years, 7 years, oh, this market should drop. It went higher. 8 years, 9 years, oh, this market should drop. It went higher, okay? And that's what I'm trying to show you here. Okay, so how is it that the market could do this for 10 years without having some major pullback? Okay, and that's what I want to bring to your attention. Because after all, let's do this. Let's go from here. Let's go 20 years. So we're going to go from there to 2010. Okay, 2010, January 4th. Let's see if we can do that. I want to bring this to your attention, okay? So what we see here is the market was just rallying, and what people are looking for are technically, basically, a big drop like this. Not the ones like this. Oh, this market should drop like it did, or the one that we had in 2000. That's what people are looking for, okay? And what I want to draw your attention to again is we want to look at, let's go here to 2000. Again, what we want to look at is what do we do when the market is 7 years into it and it's still not having that 2000 or 2003 drop or the 2008 to 2009 drop, okay? What are we looking at, all right? And that's kind of like what I see going on with the market right now. This is the monthly chart, okay? So if we look at this monthly chart, I want you to pay attention to this. Again, everybody's looking for a drop like this. They're looking for drops like this, okay? When we think about an uptrend goes up, it pulls back, then it goes higher, it pulls back, then it goes higher, okay? That's one form of an uptrend. Well, what do you mean? Well, do you mean that there's another form of uptrend? Yes, there is, okay? Another uptrend could look exactly like this. Goes up, doesn't go down, but instead goes flat, goes up, does not go down, goes flat, and then goes up, okay? Do you catch my drift? You see the difference between this one that goes up, comes down, goes up, comes down, goes up, as opposed to this one that goes up, goes flat, goes up, goes flat, goes up, goes flat. Well, this period of time while it's flat is no different from this period of time while it pulled back, okay? The only difference is you get prices cheaper over here, whereas you get price at the same level as the previous high. That's it, okay? But this period is a time of rest, just as this period is a time of rest before the rally begins again. I hope I make myself very clear, okay? So if we go back to this chart right here, what we can see is, let me do this real quick. what we can see is rather than having a market that did this, let's see if we can do this right. Rather than seeing a market that did something like this, okay, what we see here is a market that did this, went flat, went up, went flat, went up. Now it came down, but then it went up, went flat, went up, came down, went up, went flat. Okay, so what we see here is a market that went up, went flat like that, went up, went flat, went up, came down, went up, went flat, went up again, went down, went up again, went flat. Okay, any one of those work. Okay, so to be expecting a market to do this when in fact it's doing this and saying that, oh, no, it has to be this, is absolutely wrong. So if we go back here, what we have is when the market came here, oops, it went up, hi, come on, came down, went up again, all right, came down, and then this time what it's doing is it has gone up right here, came down, went back up, came down, went up, went flat, went up, and guess what it's doing now? It is going flat, ready for its next phase, going higher. Okay, that's what I see in the market. That's what we're looking at. Okay, so the interesting thing is in any major bear market, like we saw right here, you can go back and look at history. Anywhere between 8 months to about 4 years is what you look for. Okay, if we go over here, we've had this market from here to here last about 21 months. 20 months, okay? And all you really need is 8 months for a bear market, okay? We've had 20 months of the market just going flat, all right? So to think that this market, you know, is going to go down, you know, is a bubble, it's just people just doing that, just thinking, not really looking at the chart. Again, some of the curse words in trading that we say are the words think, feel, hope, wish, you know. What we see here is a market that looked like it was going to come down for whatever reason. It did not, and we can thank the governments all around the world for quantitative easing. You know, I remember people saying, oh man, I wish we had known that the government quantitative easing was going to work. I could have been in here and look at how much money we would have made. Well, guess what? They're doing it again. It's no secret, all right? They've seen it work in the United States, excuse me, and they see that they're going to start implementing that around the world, and it's happening, okay? We had the Brexit vote that should have taken the market down, but even England and a lot of other countries said, we'll do whatever it takes to keep this market up. If it means another round of quantitative easing for their own particular countries, they will do so. And that's why we see that now people are like, wow, I cannot believe that this market, let's go back to the daily chart, has such a Brexit vote. And then like now this thing has gone up and even went higher than when it was before Brexit. Okay? That was your buying opportunity right there. All right? And now we are at a stage where this market has now broken out. And I'm telling you, if by the end of this month it remains like this, where the market is above this line right here, we are looking for high. We are looking month to month, the market going higher. So all those people saying the Dow is going to drop down to 5,000, good luck with that. Okay, all those people that are saying that the Dow is going to go down to this level or that level, good luck with that, because it's written on the charts that this market is looking like it's ready to go higher. We have to wait till the end of the month to get confirmation. If you don't understand why we have to wait for that confirmation for the end of the month, you can contact us. by going to our website. We teach this type of stuff so you can see how the market really works. Okay. Again, what we try to do, the name of our company, Right Side Trading, is specific because we have to anticipate what's going to happen on the right side of this chart. Anybody, and I mean anybody, can tell you this is when you should have got in back then, or this is when you should have got in back then. But what about now? The right side of the chart. I cannot make any more money looking at this back here, but I can make money knowing what to expect going forward. And being able to analyze the chart properly is what we do, is what we teach, it is what we're all about. Learning to trade on the right side with confidence. Okay? Learning to trade on the right side with confidence. That's pretty much it, because now if we go to every other indexes, it's the same thing. The Nasdaq is beginning to do the same as well. So we can expect this to break out. All right. Right now the Nasdaq has this resistance level to deal with. Okay. Russell is already breaking out of theirs when it did this number right here. So you know, good luck expecting big drops like this on that one. Okay. The Dow is already breaking out into new highs. Same thing. So good luck expecting a bubble to bust. All right. And as well as the transportation index, which is the 5 major indexes that we look at. Okay. And this one is the one that is the most lagging, but it's also at that point where it's ready to make something happen. So if anything, we can see here that just as this market dropped back here, the Dow Transportation already did so right here. And now it's on this leg going higher. Okay. A lot of people are waiting for it to even fall down even more. If we look at the Dow Transportation, let's see if I can bring this down. If we go from here to there, that stock lost about 30%. That's a significant drop. You know, this to here was about 60%. Okay. But a 30% drop, anything over 20% is a bear market. We've already got our bear market. It's time to move on. Okay. It's time to move on. Be watching for this market to be bullish. We have exited every single one of our bearish trades. We are only bullish on our trades from now. For those people who said the market didn't drop in 2015, that's not necessarily true, because we did have that. Okay, it's just that it was choppy. Okay, but we saw a bear market in 2015. We did have drops more than 20%. We had some corrections. That's all we needed. Now things are ready to go higher. All right, so I'm going to end it over there. Again, remember to check us out on our website. Contact us, learn more, sign up for our courses, our private mentorships. These things will help you see the market the right way and help you trade on the right side with confidence. So again, I'm going to leave you guys by ending quote like always. Remember to trade on the right side with confidence.